Are you looking to get 100% financing on your next home? Well, USDA financing might be the option for you. In today's video, I'm going to show you the full breakdown on how you can possibly get 100% financing with USDA today. Guys, stay tuned. Welcome back to the channel, guys. If you're new to the channel, I'm Credit Coach Q, and I created the first cloud-based software that allows you to put your credit repair experience into your own hands. In today's video, I'm super excited because I have a banger. In today's video, we're talking about USDA. But before we get to the video, guys, please like and subscribe to the channel. It helps us actually get pushed within the YouTube algorithm and allows YouTube to push this content to a wider audience and allows us to leave these lights on. Guys, please like and subscribe to the channel. In today's video, I'm super excited because we have another special guest. We have a loan officer who cares back in the building. We might actually do a home loan episode type of deal where he's consistently on the channel giving you guys the content and the structures that you guys need to get home loans. So welcome back to the channel, man.
Thank you very much. I appreciate it.
No problem. So the last video is being ranked very well right now. It's doing very well. The FHA loan video, you're getting a lot of response, I've heard from the audience. So what has your experience been from the last video so far?
Man, it's been a great experience. It's been a lot of communication, a lot of phone calls, a lot of people want, more clarity on it. Even applications, even realtor connections, people saying they like the fact that we were able to come break some stuff down to them and really truly educate them, and they felt what we were saying. So awesome. I really appreciate it. Great response. Great response.
So give the people a full breakdown, a little breakdown of who you are again. Let them know who you are, what you've been doing, and what area you're working out of.
Outstanding. Thank you very much. I appreciate you, your platform, and your people and your clientele.
No problem.
Appreciate you.
No problem.
Coach Q. Sheldon Farmer Jr., loan officer who cares. NMLS number 1117854. Licensed in the state of Texas. I am an equal housing lender. I've been in the industry since 2000. A licensed loan originator since 2013. So my goal is to simplify the process and not make it numbers intimidating to you guys and break down it. And so I am a loan officer who cares because I truly do care, and I want to put you guys in a proper situation when it comes to home ownership.
Awesome. So he's been in the business for over 20 years, and he's very well known in the state of Texas. We've been doing it for such a long time, and it's great to see him on a platform able to give the education and the experience over to you guys. So you guys are very lucky for the opportunity. So let's dive straight into the meat and potatoes of the video. We're actually talking about USDA, right? So we talked about FHA, we talked about self-employed, and today we're talking about USDA. USDA is a little different from the other structures of funding when it comes to home loan approvals. They actually allow you to get 100% financing, but they do have certain guidelines that you have to be under in order to get approved for, correct?
Yes, sir.
Okay, so let's talk about the three main components of home loan approvals. We talk about it in every video that we talk about real estate, and the first is DTI. DTI is debt to income ratio. So your debt to income ratio is the amount of money that you bring in versus the amount of money that you spend out. So your debt to income ratio is the amount of money that you generate on your job versus the amount of bills that you have to, or the amount of expenses that you have to accumulate on a month-to-month basis. What is the debt-to-income ratio for the USDA loan?
The debt-to-income ratio for USDA loan is the front-end debt-to-income ratio, which is your income divided by the monthly payment, will be 29%. The back-end debt-to-income ratio is 41%. So it's a lower debt-to-income ratio with the USDA loans.
What is the difference between the front-end and back-end?
The front-end debt-to-income ratio is that they take basically, to make it simple, is that you take 29% of your monthly gross income, and that's how much you have available for a monthly mortgage payment. So that's how the front end is, and the back end is your monthly debts divided by the mortgage payment. Awesome.
All right, so the second component is credit. So your credit has to be at a certain point. It's not like an FHA where you can get approved in the 500s, but you don't have to have a 700-800 credit score to get approved for it either. The credit score that you need for USDA is a 640, I believe. Am I right?
Yes, sir.
640. Okay, and that is your mid score. So, guys, that brings me over to our next segment. So, if you have any derogatory marks on your credit report, I mean, any late payments, any collections, charge-off, medical bills, guys, go over to mycreditapproved.com. It's the software that I was talking about that allows you to put this full experience to your own hands. The credit repair companies are losing a lot of credibility in this space, and the best way to do it is to put it in your own hands and to trust yourself in this process. Guys, go over to mycreditapproved.com and get the 640 that you actually deserve to put yourself in the process of getting this home loan approval. Okay, so go to mycreditapproved.com. So let's talk about credit a little bit when it comes to the USDA loan. Give me a full breakdown on the credit criteria that's needed for the approval.
Okay, well, just with USDA, there's actually no necessarily minimum credit limit, but with the investors that we deal with and the overlays they have, they want a 640 at least credit score for USDA.
Okay, so there is not any certain criteria.
Minimum credit score requirement.
Right, there's no minimum technically.
Technically, yes, sir.
Right.
Yes, sir.
But the lenders make the rules,
Yes,
right?
sir.
So there is no law that says you have to have a certain credit score,
Yes, sir.
but the lenders are making the rules on saying what they are willing to accept,
Yes, sir.
and that is the 640 minimum.
Yes, sir. 640.
Okay, awesome. So that's credit, DTI. And the last one is your job history. Your job history is probably one of the most important components because a lot of people really undervalue that component when it comes to that. Everyone thinks that they just need a little money and they just need a little credit to get a home, but the job is very important. So let's talk about the job in terms of how important it is when it comes to USDA loan approval.
Stability. They want to look at your ability to repay. 2-year job history, at least. They look for the 2-year history, self-employed history, or 2 years W-2 history. But they want to look at the stability in the income because they want to make sure there's no issues with the file, no issues with the ability to repay, if you will.
All right. So is DTI credit and is your job history. Those are the main components of really any home loan approval, whether it's a FHA, USDA, conventional, whichever loan funding program you're trying to go into, you need those three components at the bare minimum to get approved. So now that we have the bare minimum, let's talk about a little bit more the different details versus the other ways of funding like a conventional and an FHA. So can you give me a compare and contrast of FHA versus conventional versus USDA?
Yeah, I can do that. Absolutely. With FHA, you have the 3.5% down and you have the upfront mortgage insurance, which is 1.75 with FHA, and the monthly mortgage insurance factor of 0.85% if you're putting down less than 10%. If you put down 10% or more, then the factor is 0.80, and then 11 years, that mortgage insurance falls off for FHA.
Okay.
With conventional, you have 3% down options, 5% down options, 10% down, 15, 20% down options. Mortgage insurance goes away at 80% of the loan to the value of the home with conventional financing. So if you have a higher credit score and lower debt to income ratio, then conventional is a good option for you to go. Okay. USDA. 100% financing, closing costs, prepaid, things of that nature will be involved. You can roll those in if their home appraises for enough and you have enough room between the sales price and the appraised value to roll those closing costs and stuff in. Okay. Also, USDA is that you can't have you would think because it's USDA that you could have a farm and things of that nature, cannot have income producing property, things of that nature on the area. It's restricted. And it has certain areas, also geographical locations that you can get a loan in because everywhere doesn't qualify for USDA. But there's more suburban areas that qualify than what you would think. And there will be a link that we will provide under the descriptions on this video as well that you guys can go into and they can search it. And there's also income requirements, difference. And also with those other programs we talked about, FHA and conventional, if you were to apply for the loan yourself, I would only use your income, correct? Because you'd be the only one on the file. With USDA, the difference is that everyone in that home who works, if income is considered in their maximum income limit for the area.
Oh, wow.
They allow 115% area medium income for a file, but everyone that contributes and makes money in that home will go toward that.
Wow.
Yeah.
So guys, let me rewind. He gave a lot of nuggets there. So one of the biggest differences for USDA versus FHA is that, and other conventional funding, is that all of the household members that's working can be on the loan, and that can help with the DTI, correct?
It can help with the DTI. It can help with the DTI, but also with the amount of income that goes on there because it's limits. Within Texas, I think it's around 91,000 or so for Harris County, if you will. So you want to be mindful of that. So you have those restrictions as far as how many people you want on there. But even if they're not on the loan, if they're going to be in that home, their income is still going to be considered.
All right, let's talk about the zones. Let's talk about the zones for USDA. I know that it's certain zones that you have to actually be considering when it comes to the purchase of the home, correct?
Yeah.
All right, let's talk more about that. Tell me a little bit about the zones of USDA and how it differs from the other conventional funding that doesn't have zone requirement.
Okay. With USDA, you have to have certain areas that has to qualify as a rural area, if you will, kind of outside city limits type area, things of that nature. And also, like I said, there's some rural areas, some suburban areas that kind of qualify for it as well. You'd be surprised, what qualifies for USDA. But again, and then also you can buy like acres of land if USDA financing acres of land is common for that particular area. You see what I mean?
Yeah.
So you have those things about that. So with the USDA, it just restricted to the areas. Again, the calculator, you plug in a whole address, it'll let you know if it qualifies. Also let you know the income limits for that particular area whenever you put in. So that calculator is going to be a very, very great tool to put in there because you can put in your income, what you make, the amount of people that's living in a household. It will tell you all that, hey, yes, you qualify for USDA or no, you don't. So there's certain restrictions and things of that on there, but it's a good option if you have low debt, and 640 and above credit score and looking to get a particular out of town, getting kind of out of the city limits, and also 35,000 or more population of as far as the minimum for the urban areas. I'm sorry, for the rural areas.
Oh wow! So this loan, guys, is a little different than other traditional loans. First of all, you have to have a rural area in order to be qualified for the zone requirements for the approval of the home loan. But like you said, we are going to put the USDA loan calculator inside of the description where you guys can be able to go there directly to see if whatever you are considering is considered a USDA loan approval, correct?
Yes, it has to be in the area considered.
Yeah. All right. So what is the ideal candidate for a USDA loan?
Someone that has, again, not a lot of debt, someone that wants to be out in the rural area and meets that, not a lot of income, kind of moderate, low to moderate income, meets that criteria. That's what it's for. So that particular be a good candidate, for the USDA. So if you're looking, like say, kind of get out of the inner city, to get out, kind of like get out a little bit and have the, you don't even have to have a whole lot of reserves and assets, just depend maybe 3 or 4 months of payments, saved up or whatever. So that would be a good candidate for the USDA. Again, the lack of, because the DTI is so tight, you definitely lack of limited debt.
Okay. What is the down payment requirement?
There is none. It's 100%.
Oh wow.
It's 100%.
What is the closing cost requirement?
It's a 1% USDA fee, the funding fee. So it's a little bit cheaper funding fee than FHA and VA in some cases. So it's a 1% funding fee with USDA. But again, the closing costs can be rolled in and stuff in different than other programs if the home appraises for enough. But my thing is just have enough, because you still have to have earnest money, stuff like that. So I basically say have some skin in the game, because it's just going to be some things out of pocket, that you're going to have to, need, but it's not as much.
Awesome, guys. Well, there you have it. 100% financing. You do have to have certain guidelines and requirements to get the approval. And what I particularly find odd is the rural area requirement. So you have to be in a rural area and you can't produce any assets on the land. It can't be income producing. So yeah, that's interesting, guys. If you find any of this information helpful, please like and subscribe to the channel and let us know what is your particular funding requirements that you're looking to go into, whether it's conventional USDA loan. Let us know if the USDA loan is a loan that you're considering. If so, what is the questions that you may have? Put them in the comments and let us know any questions that you may have with this particular group of funding. Yeah, so again, thank you for the time coming to the channel. Let the people know exactly where they can find you, who you are, and exactly give them your add-ons.
Okay, thank you so much. At Loan Officer Who Cares on Instagram, Facebook, at loan officer who cares. You guys can contact me there, follow me there, shoot me information. My website is www.loanofficerwhocares.com. You guys can go there to fill out a consultation if you need one. I call it a strategy session, and I'm easy to get a hold of. My number is 281-731-0673.
Awesome. Guys, let's do a quick recap before we close out. The DTI is what?
Front end 29, back end 41.
Okay. The credit requirement is what?
640.
640, but there's no minimum credit score. But for most lenders, 90% of the time, you have to do a 640 minimum credit score. The job history is what?
2 years.
2 years. 2 years job history. You have to be located or find interest in a rural area. Basically, you have to go within the calculator that's going to be in the
eligibility tool. Yes, sir.
You got to go and use the tool that's going to give you a better description of if you qualify for a USDA loan, right?
Yes, sir.
Okay. All right. Well, that's it for today. Until next time, guys, take care of your credit and take care of yourself. Credit Coach Q out.